Hello, I'm Ricky Lee, and this is the Capital Compass. Today, we're speaking with Laser Photonics, a NASDAQ listed company operating in high growth industrial markets with proprietary laser technologies that are disrupting traditional material processing methods. From laser marking systems to precision industrial applications, the company is expanding across multiple verticals, securing repeat orders, and recently strengthened its balance sheet with a public offering. At the same time, Laser Photonics continues to build out its intellectual property portfolio and explore additional growth avenues, including strategic acquisitions. Joining me now to walk through all of the company's positioning, technology advantages, and market opportunity is Wayne Tupola, CEO of Laser Photonics. Wayne, welcome to the Capital Compass.
Thank you, Ricky. It's great to be here.
It's great to have you. Obviously, no stranger to us over here on Stockhouse, so welcome back. Let's start with some of the core markets you're serving. Laser Photonics operates in sectors like aerospace, defense, automotive, industrial, manufacturing, and firearms also. So how attractive are these end markets from a long-term growth perspective?
Yeah, these are some of the most attractive industrial and defense markets you can participate in over long term. Across aerospace, defense, energy, maritime, automotive, and advanced manufacturing, customers are looking for solutions that deliver higher precision, better repeatability, and improve safety and environmental performance versus legacy methods. Our laser systems address exactly those needs in cleaning, surface preparation, and precision material processing. So we're seeing growing demand for non-contact, precise processing in demand environments, environmentally friendly alternatives to chemicals, abrasives, and other traditional methods, scalable, automated solutions that integrate well into modern production lines. That's reflected in our backlog, which increased from about $1 million to approximately $2.5 million by year-end 2025. That growth in backlog gives us visibility into 2026 and is a strong indicator of the long-term attractiveness of these markets and positioning within them.
And so, Wayne, your technology is often described as disruptive compared to traditional marking and material processing systems. Can you explain what differentiates your laser platforms and how your IP portfolio strengthens your competitive position?
Yeah, thanks for that question. What differentiates our platforms is a combination of performance, versatility, and integration across a very broad range of applications. Our systems are designed for demanding industrial and defense environments where consistency, reliability, and uptime are critical. Compared to traditional methods such as chemical cleaning, mechanical abrasion, or legacy marking systems, our lasers typically offer higher precision and repeatability for marking and material processing, cleaner, more environmentally friendly operation, eliminating or reducing the need for hazardous materials, and low cost, total cost of ownership over time through reducing consumables and less manual labor. So we built one of the most comprehensive laser equipment offering from a single domestic provider, strengthened in 2025 by integrating Beamer laser marking systems. That acquisition and others have expanded our range of platforms and applications from industrial marking to specialized defense and aerospace uses. So our intellectual property portfolio underpins that differentiation. It protects key technologies and architectures in how we design, integrate, and deploy our systems. And it supports a defensible, competitive position as we scale into more verticals and larger accounts.
So much so that we've seen recent announcements around repeat orders and expanded deployments, including additional firearm industry systems and optical cable laser marking solutions. What does that repeat business say about customer adoption and product market fit?
Yeah, repeat business is one of the clearest validation points for product market fit. When customers come back for additional systems or expand deployments across facilities or product lines, it tells you three things. Number one, the technology works in real world production environments. Number two, the ROI is compelling enough that customers are willing to scale their investment. And number three, the relationship is durable, which is critical in industrial and defense markets with long-term equipment life cycles. So the growth in our backlog is to about 2.5 million a year, and 2025 reflects exactly that trend. So customers in diversified end markets are not only adopting our systems, they're expanding their use cases. That gives us confidence in the strength of our product market fit and supports our view that we can continue to convert backlog into revenue and earnings on an ongoing basis.
And you touched on diversification there, and I wonder if we could maybe go a bit further into that. How important is that diversification strategy in reducing risk and expanding total addressable market?
Yeah, diversification is central to our strategy. On the product side, targeted M&A, most notably the integration of Beamer laser marking systems, has helped us build one of the largest and most comprehensive laser product offerings in the country from a single domestic provider. That breadth allows us to address everything from industrial marking and engraving to cleaning, surface prep, and precision material processing. On the end market side, serving defense and government, aerospace, engineering, energy, maritime, automotive, firearms, and broader advanced demand of improving resilience. The net effect is expanded total addressable market with reduced concentration risk. And it also makes us more strategic partner to customers who operate across multiple divisions and applications, opening the door to multiple systems, multiple site relationships, rather than one-off sales.
So essentially, we're talking about a very large addressable market here across multiple industrial segments. How do you prioritize which segments to scale into first, and where do you see the biggest near-term revenue acceleration?
Yeah, we prioritize segments based on three primary criteria. Number one, immediate pain points, where our lasers can clearly outperform legacy methods, whether that's in precision, throughput, safety, or environmental impact. Number two, regulation and compliance tailwinds, especially in sectors where environmental and safety standards are tightening, making traditional methods less attractive. And number three, scalability and repeatability, meaning applications that can support multi-system deployments, network facilities, and long-term standardization on our platforms. So in near term, we're seeing strong momentum in our core industry, industrial and defense platforms. These areas already contribute to our revenue doubling in 2025 to about 7.5 million. And they are supported by our license or increased backlog. That's where we expect to see most visible revenue acceleration as we execute against existing orders and continue to expand within those accounts and adjacent applications.
And to that effect, you recently priced a public offering, strengthening the balance sheet. How does that capital position the company to execute on organic growth and potential M&A opportunities?
Strengthening the balance sheet has been a major focus in 2025. We eliminated approximately 4.1 million in convertible debt and extinguished variable conversion warrants, flattened the cap table, and reduced interest expenses, raised additional capital to support growth rather than servicing legacy obligations. So combined with our operations consolidation, bringing the Michigan and Orlando manufacturing operation into our Lake Mary facility, which we expect to improve on the bottom line, by about $1 million annually. So we now have a much cleaner and more efficient financial structure. So that capital and cost structure improvement enables us to invest more aggressively in organic growth, R&D, go-to-market, production capacity, and customer support. We also pursue selective disciplined M&A that fits our integration model, expects that or expand the production portfolio, and is accretive to long-term shareholder value. So we're very clear, M&A has to be strategic and integratable. The early success of the Beamer integration gives us a blueprint for how to execute that playbook going forward.
We've covered quite a lot of ground here today, Wayne, but I want to look at the next 12 to 24 months now. What milestones should investors be watching for that would validate Laser Photonics' growth trajectory?
Yeah, investors should focus on a few key milestones and trends. Number one, revenue growth, backlog conversion. So we exited 2025 with revenue approximately doubling year over year to about 7.5 million, and backlog at roughly 2.5 million. Watch how effectively we convert that backlog into revenue and continue to grow it, which speaks directly to demand and execution. Number two, margin and profitability improvement. The consolidation of our operation is expected to improve the bottom line by about 1 million annually. Investors should look for continued improvements in gross profit and operating leverage as that consolidation benefit flows through. Number three, balance sheet and capital deployment. With the elimination of 4.1 million in convertible debt and reduced interest expense, we're in a stronger financial position. How we allocate that strength into organic growth and highly selective M&A, will be important indicator of our discipline and long-term value creation. And finally, number four, strategic wins and expansions in core verticals. New and repeat orders in industrial and defense and continued expansion across aerospace, energy, maritime, automotive, and other advanced manufacturing segments will help validate the scale to our opportunity. So overall, the financial and structural progress we made in 2025 gives us a solid foundation over the next 12 to 24 months. Our goal is to demonstrate that this stronger platform can support sustained growth, improving earnings power, and enhanced cash generation, all aligned with long-term shareholder value creation.
Well, Wayne, it sounds like you have a very busy 12 months ahead, so I won't take any more of your precious time. Thank you so much for joining us today.
Thank you, Ricky.
Once again, that is Wayne Tupola, CEO of Laser Photonics. For more information, visit lase.com. That's LASE.com. I'm Ricky Lee, and this has been The Capital Compass. Thank you for watching, and I'll see you again next time.